I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my business partner, colleague, and friend, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle, among other things. This is the 242nd episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk Gina, we're going to talk gold, we're going to talk uranium, we're going to talk the Fed and the pending Fed decision, I believe November the 1st. We'll get into some of the madness going on around the world. Mr. Hodge, first and foremost, as always, how are you today, sir?
I'm doing very well, Gerardo. We got our first snow in the Pacific Northwest this week. The temperatures have dropped commensurately with the broader indices. How are you, sir?
I'm wearing a pullover here, so, it's starting to get cooler over here in Texas as well. But, given the state of stuff going on around the world, I am thankful and healthy, as is the family. We know, we get daily reminders now on a mass scale about how quickly that can change. So I never take it for granted. So long-winded way of saying I'm doing really, really well. Obviously want to talk markets and want to talk oil and, all the games being played in the lithium space, which are really interesting to me. But yeah, I'd be remiss to not touch on two things. Israel and Palestine, I mean, that is not trending in the right direction. And it's just tough to see some of the images coming out from that region. Wanted to touch on that just briefly and have to mention Maine, right? Another mass shooting. Guy walks in with an assault rifle. There's 100 people in there. He kills 18 at last count. He injures over 20. People that are just fucking bowling, man. Just enjoying an evening, maybe having a beer. Maybe they're in a bowling league. Maybe they're teaching their kid to bowl. And again, I am a fierce defender of the Second Amendment and I absolutely believe in it. But I'm also a fierce believer that the way that we own weapons in this country is moronic. It's stupid. And what I mean by that is the lack of measures, and we've said this so many times because it keeps happening in our country, the lack of measures in place to make sure that people are trained properly, are vetted properly, have some sort of defense mechanism for, these mass shootings that continue to happen. Is that going to solve everything? No. But the way we treat mental health illnesses in this country, the lack of background checks in a lot of places, which is basic, the lack of emphasis on really tracing, not just weapons, but ammunition. And look, this guy's still on the run. The family is encouraging him to turn himself in. There's red flags. There's always red flags after the fact, right? That everybody noticed and now wants to talk about. But again, I don't have the solution. I'm not smart enough. It's above my pay grade. I just know we're doing the bare minimum. And in a lot of places, our politicians are doing the opposite of making responsible, safe gun ownership a possibility. They're making it to where you can be reckless and impulsive and violent and have domestic violence in your background and have abuse cases in your background. And, oftentimes don't even have a background check right now on you to purchase any weapon. So should be at least as tough as getting a driver's license, but who am I, right? Just Gerardo Del Real outside of Austin, Texas, looking at the madness and just heartbreaking.
It is heartbreaking. And, it's getting to a point now where you think about, freedom and rights. And of course you have the freedom and the rights of the Second Amendment, but you also, and coming from a father now, right, of three kids that are growing up, and you mentioned taking kids to the bowling alley, and it was like teen night or something too at that bowling alley, by the way. So there's that. But you also have the freedom and the right to like not go out in public and be fearful and be worried, right? And so we have to strike a balance there. A personal story. I went to the movies, and I never go to the movies, so
what'd you see?
For Killers of the Flower Moon.
Ooh, how is it? I'm dying to see it. No pun intended.
It's long. It's long, 3.5 hours, but it's good. And we went because my wife and I had both read the book recently. And so it was worth going to check out. And it was good, but I packed heat and I haven't really carried my firearm in a while. Like I don't generally take it when I go out, but given the the location, right, of a theater, that where the exits are and having your back to the wall, and then what, previous theater shootings, I thought before I went on a date with my wife to slip my firearm into
Absolutely.
the back of my pants, right, which I'm licensed to do here in the state of Washington. So you shouldn't have to like consider that before you go out though, and like take that step. So anyway, just a personal anecdote, but you mentioned the mental health, and it's interesting, right? Because you get back into a rights debate. One of the more interesting things I've seen written about lately, and I think there's actually some about it in the Fourth Turning, is about, yes, how we treat mental health, but how we entitle the patient, right? Like the trend for the past however long, saeculum, if you want to call it, not saeculum, period, 20-year period, has been towards like patient rights, right? Like allowing the patient to decide, if they want to be admitted, or allowing the patient to check themselves out. Whereas in the 70s and 80s, we had more mandatory stays, and you could be committed by family members and things. And there's an inverse relationship with the amount of rights we give to the patient to not be in a mental institution, to not be hospitalized, and the amount of mental health related mass shootings, right? It's pretty clear. And so, and people are snapping, I guess, is the other thing I was going to say. So we've read a lot more recently, and there's been more academic studies about deaths of despair, right? Deaths of despair are, span the gamut, suicides, suicide murders, et cetera, for different reasons: alcoholism, financial wealth disparity, substance abuse, opioids, et cetera. But the point here is there's all these myriad stressors, and more people are taking their lives and dying earlier, not just taking their lives, but, dying of heart disease, or, dying of whatever it is. It's in some cases because they can't afford treatment. And this has led to just more stress on everyone, but, certainly a generation that has, already lived through, and this is really getting into generational stuff, increasing wars. We just talked about the Middle East, for example, financial recessions, the global financial recessions in 2008, the wiping out of savings and housing. And so anyway, all this compounds into stressors. And I was thinking about the pilot, this week who had seemingly had a mental breakdown and shut off the engines in the Alaska Airlines flight. So, whether you walk into a bowling alley with an AR, or whether you're riding in the jump seat of an Embraer, I think it was a 175, and decide to kill both the engines with 80 people on board. I think there's some of the same stressors involved and some of the same mental states involved, and definitely worth spending some time both there and on the gun laws, red flag laws, I think, particularly as they relate to mental health and times of crisis.
Well said. Heart goes out to everyone out there. Thoughts and prayers aren't going to do it, folks. We need some actionable items, and so let's hope that we see some of those. Let's dive into the markets. It's been another interesting week in the lithium space. I have to start there, right? Gina Reinhart, she's got deep pockets. She doesn't like people coming in her backyard and trying to scoop up assets, and she doesn't mind buying with reckless abandon. She is now rumored, after, killing the Albemarle deal, to have been, accumulating a stake, a 15% stake in Azure Minerals, right? And again, great hits, great intercepts. I'm not going to poo-poo the deposit or the potential scale. They had some metallurgical results a few months back that lead you to believe that the operating costs are going to be higher than, deposits like Corvette or other types of deposits that are lower cost. But all that being aside, congrats to them, because they just got nearly $3 billion offer without a resource even in place. And so I didn't understand the end game. I reached out to a couple of folks down under, and their response was pretty unanimous to me. It was that they believe the end game is she doesn't want people in her backyard buying up Australian assets. And, the rumor is that she's got a 5% stake in Patriot. Again, kudos to the team over there for getting the $3 billion offer. Gina's now stepped in and apparently, again, wants a seat at the table, and wants a pretty big seat at the table. And it's going to be interesting to see if that $3 billion offer is consummated, or, you know, if she comes in again and takes another one off the board, all of that, however it plays out. I have no skin in the game. I don't own any shares of the company, but it bodes really, really well for large scale, very low cost projects like Corvette that have the potential to be, you know, once in a lifetime type deposit. So yeah, interesting to me. Any end game thoughts that I might be missing other than the nationalist angle of don't fucking touch our assets?
Seems like an expensive hobby.
It seems like an expensive hobby. Indeed, interesting to watch. I suspect we're going to see some more of this, but I will say this for our friends down under: they've been protecting their border well as it relates to who's going to control the nation's resource richness.
Yeah, I mean, what are your wider thoughts on the lithium space of late? I guess I was reading a report from Allchem saying their recent sales price was about $25,000 a ton of lithium carbonate. I was talking to a gentleman who's got a fund out of New York this week who's been investing. They're invested in MineHub and are keen on Q2, and he was wondering, you know, I think what everyone wonders is, you know, I see all these lithium companies coming, I see all these new projects. He was like, are we at a point where we need to start worrying about oversupply? And I know I've asked you this before, and I'm pretty sure I know the answer, that, you know, discoveries aren't mines, and having a drill hole in a pegmatite doesn't mean that, you know, that whole ore body is mineralized, etc. But you know, what are your thoughts?
I always defer to the smarter people in the room. In this case, you know, the Joe Lowrys of the world, the Simon Moores of Benchmark Research. They do phenomenal work. And look, the consensus across the board, whether you're listening to earnings calls, you know, from the major producers, or you're listening to analysts where literally that's all they do, right? I dabble in copper, I dabble in gold, I dabble in, you know, lithium, all sorts of things. But the consensus amongst the experts that are really crunching the numbers is there's going to be a shortage, not an oversupply, for the reasons you stated. There simply aren't the amount of quality discoveries that can be permitted and built within the next 5 to 10 years to supply the market with the projected growth. Now, could the projected growth slow? Sure. It could also accelerate, right? And so there's two kind of two sides to that coin. I was listening to a presentation from Ken of Patriot fame, not executive chairman, and he was talking about the price manipulation. He touched on that a bit, but he talked about how the run up to 80,000 wasn't sustainable, and it was because of capacity mismanagement from China, where they were scrambling to secure supply at any price. That's what caused that jump higher. And he talked about how now in the West, we're doing the exact same thing. We're ramping up capacity to build and to produce, but the supply isn't being ramped up concurrently. And he said he absolutely expects prices to once again resume that volatile, you know, up and down chart that goes that way, the way we want it to go, in the not too distant future. He thinks the softness is seasonal. The softness was healthy, but he absolutely sees, you know, a near and midterm future where lithium prices will be volatile, but they're going to be volatile to the upside, and we're likely at or near a bottom. And, you know, again, they are much more plugged into the everyday dialogue that goes on between the Albemarles and the Pilbaras and, you know, the big major producers out there than I am. And so when all of the smarter people in the room are echoing the same sentiment, I tend to believe them. Then when I look at a company like Argentina Lithium, which, you know, secured $90 million with a $30 million market cap at the time, from Stellantis to become, you know, a major shareholder, but for a fraction of the company. The reasoning for that deal was, again, explained to me really clearly by the CEO, Nico. He said, it's security of supply, not price, that's important to the companies and the groups that we're talking to right now. Stellantis wants to know its business model is viable over the next 5 to 10 years. And if that means giving us, 3 times our market cap at the time for a 20% stake and a seat at the table for supply, then that's what it takes. And so all of that bodes really, really well for patient speculators in the lithium space. And look, that doesn't mean we can't have softness again for the next couple of months. That's very, very possible. We have tax loss selling in the market. We have frustrated shareholders across the lithium space that have only seen gains for a couple of years, right? And all of a sudden are looking and saying, oh shit, I'm down 50% from where I started the year. You have companies like Patriot. People forget, I pulled up a 1-year chart. Patriot's 52-week low. We're like, I think 75 or 80% higher than that, right? Despite the recent pullback. And look, I haven't been pleased with the share price pullback. Though again, the execution's been phenomenal and eventually it'll catch up. And, the more pieces that you take off the table, the better it is for Patriot. So I don't worry about my lithium investments. As you know, I've been writing, bigger checks in multiple private lithium companies. I really like James Bay. Can't not mention, Q2. Its drills are turning. We should have an update there soon. So there's a lot to like. The James Bay region is what I really, really like because of all the capital that's coming in. Because I think there's going to be expedited permitting that happens because of the capital that's coming in. And again, all of that bodes well for the checks that we're writing. Does that mean that, Patriot goes to 20 or 30 tomorrow? No, because I thought it should have been there 6-7 months ago, frankly. But, don't confuse share price for value, folks. Know what you own and own what you know is what I like to encourage everyone to do.
Well, yeah, valuation is not a catalyst, as the saying goes. And you mentioned patience, and I was quoting that wonderful song from Guns N' Roses in my foundational profits issue for October, and it's appropriate because it is going to take some time for some of these resource stocks to turn around, and at the same time, I guess the point I was making in that issue and that I want to make here is that in some sense, we saw it coming and prepared for it, right? It's not like you were sitting here blindsided. And obviously, we told you a couple of weeks ago that October was going to be rough. But even before that, going back to late 2021 for me, getting out of the energy trade, and in 2022, getting really much larger into cash we put ourselves in a position to be patient. It's not like we have to chase down or to average down. We're sitting in a lot of cash that we can be patient, and that's what I wanted to say is, you're here in October, getting close to November, with significant weakness in the resource market. The TSXV has only been this cheap in 2008, and the real weakness in the 2015 2016 resource market. And so you're getting into tax loss now, and it feels better to have cash than to not have cash, and just to be sitting watching your stocks go down. And I guess this is the real point, and having to capitulate, right? Because if you remember when we were having this broader market bounce over the summer in July and August, and then heading into the fall, I was telling you that I had sold some stuff, right? Sure. To pay some bills, right? Got taxes to pay, got whatever, fall tuition for the kids. And so it was better to have done that now than to have waited until the liquidity crunch got even worse and the algorithms kicked in, which is what you're seeing in the markets now. You asked me what I was watching for in the markets the past 2 weeks, and I said volatility. And now look at where the VIX index is now, and look at the cascading selling we're seeing, even with 4.9% on the GDP, which just came out, which is primarily government driven. But let's set that aside for a second. And decent earnings out there, right? Yeah. Last quarter we had negative earnings growth. I was telling you this quarter, Microsoft comes out and crushes it, and what happens? This Magnificent Seven immediately starts trading the other way, and those were the 7 stocks that have been bolstering the market. And why is that? It's because the market's looking ahead, and it's what at least I've been writing in part is that you're going to get good GDP right now, but that growth is going to slow down again in this quarter, the current quarter, Q4, and in Q1, and that's going to present great opportunity, not just in lithium stocks, but in other stocks as well. So went off on a bit of a macro tangent there, but easier to be patient when you, one, have cash, and two, don't have to sell for your own liquidity needs.
Yeah, couldn't agree with you more. Just circling back and coming full circle on Patriot, again, the 52-week low, just to be accurate, is 485 Canadian. The stock's sitting at 1037, folks. So I understand if you bought at 15 because you started buying at 15, you're not happy that it's at 10. I wouldn't be either. I'm not happy that it's at 10. I bought at 16 cents with a 25-cent warrant and then double down on that on the 34-cent financing. So, I don't say that to brag. I say that to say being early is what allows us oftentimes to get in a position where if a stock pulls back 50%, like Patriot has many times over, you can afford to sit on that and say, okay, I know what I own. I know the trend. Company's cashed up. It's executing. Just wait for this to pass. And so I think we're at a bottom in the lithium spot price. The real lithium spot price, what producers are selling it for. And I think it's brighter days ahead. And again, for Miss Gina, curious to see where she deploys that checkbook next. And look, it happens quick, folks. The other side to the lithium equities coin is you could wake up and have your company, pitched an offer at 100% premium, right? The offer for reserve was a 55% premium, I believe, to the 10-day moving average. This in a down market. So, do you want to be on the sidelines when that happens and miss that? I personally don't, but everybody's got to make their own decisions. Again, my losses are my losses, not yours. And my gains are my gains, not yours too. So it's we all got to be big boys and girls and know why we're writing the checks and know why we're selling stuff and be accountable for those decisions.
Mm-hmm.
We have a gold market. Let's pivot really quick into that. Gold's back at the 1980 level. Technically, it looks good. I want to ask the chartist, Nick, to look at his crystal ball and tell us what the technical levels are.
I mean, it's interesting, man, because these rates and this dollar is so strong. And even with the short-term rates at 5% now, any weakness in those rates, even though they're overall strong, is fanning gold. So, and at the same time, you mentioned a Fed meeting we got coming up here in November, which, I think he's going to punt. As we were talking about recently, the market went ahead and raised rates for him.
Yep.
Him being Jerome Powell. So, I don't think he's got a raise here in November. We'll wait and see how this, fourth quarter the GDP shapes up and then what we look like heading into the new year. But I think he takes his foot off the gas and, we just stay higher for longer. I told you last week that, what was needed for gold to go to all-time highs was just for gold to go to all-time highs. But that, I expected a consolidation north of 1900 before that happened. And you're starting to get that now. It's actually held up better than I thought it was going to. I thought it was going to consolidate down closer to, the 1910, 1915 level, but you're getting some sideways action in the 1970s here. And I think that's still because you've got the risk off geopolitical sentiment trade still on, right? We had said that the response from Israel was a bit delayed, right? We at least I'll talk in terms of and I think the market thought there was going to be a ground invasion sooner, and that was delayed a little bit, and that allowed oil to pull back a little bit. But just in the past couple of days, we've seen more airstrikes from Israel, a preparation and an announcement of a ground invasion. And I think that's what's allowing gold and to a certain extent Bitcoin to remain higher. So gold looks good. Worthy of buying on pullbacks here. What does a pullback look like at this point? Right now, like in the next week, a pullback looks like 1955 or something like that. And yeah, you've got to allocate. GLD has held up really well. The stocks have not been as strong. So, and I mean, pick your flavor. If you look at what did I see? Newmont, just digested Newcrest, for example, paid $17 billion for it, but only added $4 billion in market cap. You can't make that up on volume. You've got, other producers out there reporting reality, right? Like OceanaGold coming out, reporting higher costs and not a great quarter and just not being rewarded in the market because they're equities. The same way with lithium, right? The fundamental case can be really robust, but in the short term, equities are still equities, and the underlying commodity or metal is still the underlying commodity or metal. So, what am I trying to say? So even the big boys, I guess, is what I was saying, are not doing their thing yet. And then the little boys and girls, especially those that the market knows need to finance, are being, in fact, punished. We talked about revival gold last week, and I was saying that sting bids might be the way to go for this very reason, that they had to finance. And they, in fact, have been punished in the market as gold has remained above 1900. So, all that to say, it's the same as what I've been saying. Gold is bullish, continue to add to the metal itself on pullbacks, and you only have to bother yourself with the highest quality, most liquid, cashed up companies to even put on your watch screen right now. I mean, the other ones, you don't really have to spend any time looking at, because they're going to have a rougher time ahead in the next 2 months, so you'll be able to buy them cheaper.
Agreed. We talked underlying commodities. Got to talk uranium. Hit a 16-year high, I believe, as high as 74.50 this past week, sitting at 73 right now. Worth noting before we get into the uranium dig, the dollar index. You touched on the strong dollar. Gold looks beautiful to me in light of a 107 U.S. dollar index, right? That's worth noting as well. I've insisted that, for gold to break out to new all-time highs, and I've been saying this, I think, since 2016. We would need a cycle where the dollar goes higher, gold goes higher, and equities also go higher. I don't think that scenario can happen until Jerome chills, right, and eases up a little bit as far as the broader indices go. Now, for the reasons you mentioned, but that could be a quarter away. It could be 2 quarters away, and then I think, it's new all-time highs. So I also think new all-time highs are coming for the uranium space. I forget the group, but a very well-known, respected research outfit put out a note saying, I've said uranium could overshoot to 200. They said they could see a scenario where it could overshoot to 300 because of the lack of commitment from the utilities to contract for the next cycle at current prices. And so, again, talking about being early and being ahead of the trend and positioning your stock portfolio well to be able to deal with pullbacks. Uranium is at 73 compared to uranium equities. The equities still look very, very cheap to me, given what I think the runway is. And, we mentioned some quality names. We talked Sky Harbor in the past. We've talked UEC. We've talked, I don't want to give, the whole thing away, but all of those are near 52-week highs. And this in a tough resource space. Hard not to like it at these levels. Thoughts on uranium and the fundamentals there?
Not too much new. No, it needed to get above that 73 level to be, technically in a breakout. That was resistance. And I forget last check what it was, 73.65 or something like that on the spot, or 85. So it is breaking out. I give you my caveat, of course, with spiked volatility, these prices can cut both ways and fast. But if there is a bright spot in the market, it's energy. Including uranium, which I told you last week. Now the spot prices of the underlying commodity is technically breaking out. So what was I going to say? I guess a couple of things. One, a freebie I'll give you is Can Alaska. It's not a company I talk about a lot, but it's one I watch out of the corner of my eye. And they just approved a spin out of their nickel assets, so you can get a freebie if you become a shareholder here soon. I think they're trying to approve it by the end of the month, but it got a shareholder approval. So you'll get a share of their nickel company when they spin it out. And, that company is not one I own shares of, but it is one I watch, and it's sort of like a Sky Harbor-ish type, Canadian land bank deal. So anyway, a freebie one for your radar. And then one that ate shit this week is NuScale.
That's a technical term, folks.
Which isn't a uranium company, but it got swept up into the sphere of the whole nuclear realm because it's a small modular reactor company. So this is the company whose ticker was SMR for small modular reactor, and they were the first company to win approval of their design, their small nuclear reactor design. But there was a short report issued on them about them and one of their supposed clients, basically saying that the client was bullshit and was never going to be able to pay for the reactors that they had ordered or were planning to order. And so this is a stock that in August last year was over $14. And this is a stock today that trades at $3.50. So it was a $6 stock earlier this month, and people are just, completely abandoning it. So I had taken a flyer just to force myself to pay attention, and will likely get rid of that flyer here soon. I was thankful that I never recommended it, had done some research on it, and never pulled the trigger. And sometimes, your gut tells you not to recommend something for a reason. And in this case, with NewScale, whether or not these allegations are true, I don't know. But I do know that the only price that matters is the last one. In this case, the last price is down significantly from its recent highs. So if Google, if you want to learn more, if you're interested in that company, Google NewScale short report or whatever. It makes for interesting reading. And also makes for, continued education, right? What am I trying to say? This is a new space, right? This is a new type of technology. There's no established leaders. And so, we talk often about black box technologies and why they can be risky and why we don't invest in them for the large part, whether that's, some new exploration technique or some sort of extraction technology. There's technology and adoption risks. And anyway, seeing that here with NewScale and the nuclear side of the market. So just thought it was worth mentioning, I guess.
Absolutely. Absolutely. Also worth mentioning, Bitcoin, a breakout, 35,000. Our in-house expert, Mr. Chris Curl, has been calling for this breakout months and months ago to subscribers. Just launched, and we talked about it last week, the $1 Million Crypto Club, Mr. Curl's baby there. Thoughts on Bitcoin, the crypto space, and the $1 Million Crypto Club?
Yeah, it's back to technically bullish. I would say sign up to learn more from Chris at this point, because last week I told you we'd be bringing you this $1 Million Crypto Club, and this week it's here. So we'll put a link up either, if you're watching this on YouTube, we'll put a link in the description of the video. And if you're watching it embedded on Daily Profit Cycle, we'll have a link somewhere on the page. But, this is, if on the one hand, it's breaking out for the same and similar reasons that gold is breaking out. And then it has some additional things going on, specifically the halving that comes next spring, that are additional catalysts that gold doesn't have. But the chart says it's back to technically bullish trend, and we'll see where it goes from here, I guess is what I'm going to say. And it's the same as gold now in that if you do get a pivot, whenever that is, it's going to push Bitcoin higher. And so in some ways, Bitcoin has the additional catalyst because it has everything going for it that gold does, plus the happening. Now it has more inherent volatility, so it can cut both ways faster. You obviously got to keep that in mind, but worth having as part of your portfolio, at least from where I sit, because immediately this week I start seeing these gold versus Bitcoin articles as Bitcoin breaks back out, and it's not an or. It's like not even a question in my mind. It's an and, right?
Right.
So I just don't even know why people entertain that. It's not even an argument for me. But a bit of a rambling answer there. But I've always told you I was a long-term bull on Bitcoin. I did think it was going to get a bit cheaper, but before it went up. But chart says it's bullish, and I'm glad I own some, just like I'm glad I have cash.
Well, I'm glad that we allocated $50,000 of company funds to Mr. Curl to go and grow that, because I'm excited to see what that does as the trend continues to be favorable. I'm supposed to remind you every week to check us out at dailyprofitcycle.com/subscribe to never miss our updates, our insight, our research, my ranting, my raving, and the opinions from all of our talented editors at Daily Profit Cycle. I should also remind you, for those of you that are looking for specific research and guidance, go to digestpublishing.com. That is, the company that is host to a lot of the paid newsletters that we provide. A ton of education. You can get, a publication and service across many sectors, whether it's the resource space, the crypto space, the tech space. And so I encourage everybody to go over there as well. Mr. Hodge, by the time we put this out, you will be in New Orleans. I will be en route. I want to encourage all of you, if you see this, if you see us, if you catch us at the conference, Nick and I will be presenting. We'll actually be recording Bizarro World live from New Orleans, but if they're subscribers or shareholders of, some of the companies that we talk about here, and you see us, come and say hello. We'll have a drink, and maybe, introduce you to a few of the companies that catch our eye from the trip. Always excited to get down there. I love New Orleans. I love the conference, and the networking is always good. And sometimes you even come out with a good idea or two.
I was going to conclude with the same thing. Yeah, if there's something you want us to talk about in the podcast and you can't make it, just drop it in the comments. And next week's episode will be recorded live side by side, sort of like we did at Beaver Creek. And we look forward to either seeing you there or delivering this podcast to you if we don't see you in person.
Perfect. Anything else you want to get off your chest this week, Mr. Hodge?
No, I think that's it. Gearing up for the conference.
Let's do it. This is Gerardo Del Real along with Mr. Nick Hodge. This was episode 242 of our weekly therapy session that we call Investing in Bizarro World. Be kind to each other out there, everybody. Send us off, Nick.
See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.